To Tom Piotrowski over at CommSec for a look at the markets today. What's the read on today, Tom?
Pete, we're going to take a little bit of a step lower at the start of trade this morning. The futures are pointing to a decline of around 0.4%, reflecting a similar experience where US markets in particular were concerned on Friday. We saw some higher than expected producer inflation numbers, Pete. So what happens at a factory level compared to a consumer level? When you look at the rate of change, it really reflects the shift in comparisons to the numbers of a year ago. So the annualised pace of producer inflation went from 0.2 to 0.8%. That was higher than what the market had anticipated. It pushed long and short-term interest rates higher, and as a result, stocks ran into headwinds over the course of the session. The Nasdaq down 0.7%, the S&P 500 down 0.1%. The Dow managed to improve by around 0.3%. But when you look at the performance of technology stocks in weekly terms, the Nasdaq was down by almost 2%. It reflects that shift higher when it comes to interest rates. So over the course of the week, we saw both 2- and 10-year Treasury notes up by about 10 basis points, which is a decent move higher. So that's how the setup emerges as we begin this week. It'll be a momentous week this week, Pete. It's the busiest one of the company reporting season at home. So a lot of discussion around how local corporates will be faring with it. Get an immense cross-section of the local landscape in that regard. Today, for example, we'll get Ansell, Horizon, Bendigo and Adelaide Bank, Car Sales, JB Hi-Fi, Lendlease, Temple and Webster, amongst others, reporting results. We also have important economic news this week in the form of the wage price index and the unemployment report, in addition to what's happening overseas. So it'll really test the mettle of the markets this week.
Okay. Thanks, Tom.